What if I told you that Bitcoin reaching 1 crore rupees isn't just a wild prediction from some crypto enthusiast on the internet? What if I told you that based on the fundamentals, the math, the adoption curves, and the global economic forces at play right now, Bitcoin hitting 1 crore rupees is not only possible, but actually inevitable? I know that sounds bold. I know some of you watching this are thinking, this guy is crazy. Bitcoin is already expensive. How can it possibly triple from here? But by the end of this video, I'm going to walk you through the exact reasons why this isn't speculation. This is based on data, patterns, economic principles, and forces that are already in motion. And the most important question isn't whether Bitcoin will hit 1 crore rupees. The real question is, will you be positioned before it happens, or will you be one of those people who looks back 5 years from now saying, I should have bought when I had the chance? So stick with me for the next 20 minutes, because what I'm about to share with you could completely change how you think about money, investing, and your financial future. Let me start by addressing the elephant in the room. Right now, as I'm recording this, Bitcoin is trading somewhere around 35 to 40 lakh rupees. For it to reach 1 crore, we're talking about a 2.5 to 3 times increase from current levels. Now, to the average person, that might sound like a massive jump. But here's what most people don't understand about Bitcoin. This kind of growth isn't just normal for Bitcoin. It's actually conservative based on its historical performance. Let me give you some context. In 2017, Bitcoin went from around 80,000 rupees to over 13 lakh rupees in a single year. That's more than a 15x increase. Then in 2020 and 2021, Bitcoin went from around 5 lakh rupees to over 50 lakh rupees, another 10x move. Each cycle, Bitcoin has experienced these massive bull runs, and each time the base price gets higher. So when we talk about Bitcoin going from 40 lakhs to 1 crore, we're actually talking about one of the more modest increases in Bitcoin's history. This isn't some moonshot prediction. This is a rational extrapolation based on established patterns and fundamentals that are stronger today than they've ever been. The new institutional landscape. Now let's talk about why this time is genuinely different, and I don't use that phrase lightly. The biggest change in the Bitcoin landscape over the past 2 years has been the entry of institutional investors. We're not talking about retail investors like you and me buying a few thousand rupees worth of Bitcoin on an exchange. We're talking about the largest financial institutions in the world, managing trillions of dollars, now allocating serious capital to Bitcoin. BlackRock, the world's largest asset manager with over $10 trillion under management, launched a Bitcoin ETF in 2024. Fidelity, another giant, did the same. Grayscale has been accumulating Bitcoin for years. These aren't crypto startups or tech enthusiasts. These are the most conservative, risk-averse financial institutions on the planet, and they're now telling their clients that Bitcoin deserves a place in a diversified portfolio. Think about what this means. For decades, if you wanted to invest in Bitcoin, you had to set up an account on a crypto exchange, figure out how to secure your private keys, and navigate a world that felt foreign and risky to most traditional investors. But now anyone with a brokerage account can buy Bitcoin exposure as easily as they buy stocks. Your father, your uncle, your colleague who's been skeptical about crypto for years, they can now buy Bitcoin through their existing investment accounts without ever touching a crypto wallet. This is a game changer. The infrastructure that prevented billions of dollars from flowing into Bitcoin has been removed. The gates are now wide open. But here's the really important part that most people miss. We are still in the very early stages of institutional adoption. Current estimates suggest that less than 2% of institutional capital has been allocated to Bitcoin. Less than 2%. Think about that for a moment. When traditional institutions fully embrace Bitcoin, when that number goes from 2% to 5%, then to 10%, then to 15%, we're not talking about incremental price increases. We're talking about exponential growth. And this isn't speculation. This is simple supply and demand economics, which brings me to my next point. Supply and demand fundamentals. Let's talk about the most basic principle in economics: supply and demand. This is something you learned in school, but most people don't actually apply it to their investment decisions. Bitcoin has a fixed supply. There will only ever be 21 million Bitcoin in existence. Not 21 million and one, not 22 million, exactly 21 million. This is written into Bitcoin's code, and unlike government currencies where central banks can print more money whenever they want, nobody can change Bitcoin's supply cap. It's set in stone. This makes Bitcoin the first truly scarce digital asset in human history. Now let's talk about demand. India alone has a population of over 140 crore people. Let's do some simple math here. If just 1% of Indians, that's 1.4 crore people, decided they wanted to own just 0.01 Bitcoin, that's 1.4 crore people competing for only 210,000 Bitcoin. And that's just India. Now expand that globally. The United States, Europe, Latin America, Africa, Southeast Asia. Billions of people are becoming aware of Bitcoin, and as awareness grows, demand grows. But the supply? The supply stays exactly the same. It doesn't matter how many people want Bitcoin. It doesn't matter how high the demand goes. Only 21 million Bitcoin will ever exist. And here's where it gets even interesting. In April 2024, Bitcoin went through what's called a halving event. This happens approximately every 4 years, and it cuts the rate at which new Bitcoin are created by exactly half. Before the halving, about 900 Bitcoin were being created every day. After the halving, that number dropped to 450, and in 4 more years, it'll be cut in half again to 225. This is programmed scarcity, and it's unprecedented in the history of assets. Imagine if gold suddenly became twice as hard to mine every 4 years. What would happen to the price? It would skyrocket. That's exactly what's happening with Bitcoin, and we've already seen this play out 3 times before. After the 2012 halving, Bitcoin's price increased by over 5,000% in the following year. After the 2016 halving, another massive bull run. After the 2020 halving, Bitcoin reached new all-time highs. The pattern is clear, and we're currently in the early stages of the post-2024 halving cycle. Inflation and currency debasement. Now I want to talk about something that affects every single person watching this video, whether you own Bitcoin or not, and that's inflation and the debasement of fiat currencies. Your rupee is losing value every single year. This isn't a conspiracy theory. This is basic economic fact. Official inflation rates in India typically range from 5 to 7% annually, but if you actually track the prices of things you buy regularly, like food, fuel, housing, education, healthcare, the real inflation rate is often much higher. What this means is that if you have 100 rupees today, in 1 year, that same 100 rupees will only buy you what 93 to 95 rupees could buy today. In 10 years, your 100 rupees will have the purchasing power of roughly 50 to 60 rupees. Your money is losing half its value every decade, and most people don't even realize it's happening because it's gradual. This is where Bitcoin fundamentally differs from traditional currencies. Bitcoin is deflationary. While governments can print unlimited amounts of fiat currency, and they do, especially during crises, Bitcoin's supply is fixed and actually becomes more scarce over time because of those halving events I mentioned earlier. When central banks print more money to stimulate the economy or pay off government debt, they're diluting the value of every rupee, dollar, or euro in circulation. But they can't dilute Bitcoin. Every time a government announces a new stimulus package or prints more money, Bitcoin becomes relatively more valuable because its scarcity remains constant. Let me give you a practical example. In the year 2000, the total money supply in most major economies was a fraction of what it is today. The US dollar supply has increased by over 800% since then. 800%. That means for every dollar that existed in 2000, there are now $9 in circulation. The rupee has experienced similar expansion. But Bitcoin? Bitcoin's supply schedule is completely predictable and transparent. We know exactly how many Bitcoin exist, how many are being created, and how many will ever exist. This predictability and scarcity make Bitcoin an incredibly attractive store of value in a world where governments are constantly debasing their currencies. Here's something that might blow your mind. When I say Bitcoin will hit 1 crore rupees, I'm not necessarily saying Bitcoin itself will become more valuable in real terms. What I'm saying is that the rupee will become less valuable, and Bitcoin, being a scarce asset, will reflect that. 1 crore rupees 5 years from now might actually have the same purchasing power as 40 lakhs today because of inflation. So Bitcoin reaching 1 crore isn't just about Bitcoin going up, it's also about fiat currencies going down. It's about the inevitable debasement of paper money and the increasing recognition that we need stores of value that can't be manipulated by governments or central banks. Global economic instability.